think, act, and prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show, where we think, act, and prosper. Here we talk all things macro. We get into a little bit of the micro, but we focus on macro topics such as what is government policy doing, what is happening with inflation, what is happening with the Fed, all those different things so that we can actually make chess moves on the chessboard and we can be 3 to 4 steps ahead of what policymakers are doing. So we want to protect our wealth, we want to protect our money, so we are going to look at the macro picture, and sometimes we do dive into the micro as well. So today, CPI inflation came out at 9.1%. 9.1%. And this is according to the government, right? This isn't necessarily what Shadow Stats is predicting, which we'll get into that, and how the government measured inflation back in the 1970s. This is a new metric of how they measure inflation, how they've been measuring inflation since, I believe, the 90s or whatnot. So is it really 9.1%? Do you all feel like it's 9.1%? I mean, for me, I'm starting to feel it, somewhat. It's like, hey, well, I need to go make more money, so that's some of the things that I'm thinking about. Are you thinking about you need to make more money? So those are some of the things that we have to think about. And, we have to adjust our lifestyles. We have to adjust our lifestyles to the cost, the increase in cost that we're experiencing, and all those different things. And so inflation is real. We haven't experienced it in a long time. I mean, we've obviously suspected that we've experienced inflation, over the past 20 years. I mean, we've seen the price of housing go up. We've seen all these assets increase in value. Housing is way more unaffordable than it was back in the 50s, 60s, 70s, all those different things. And the dollar has lost value. We haven't seen real wages in a while. We've only seen our nominal wage go up. We haven't seen our wage adjusted for inflation. So all those different things, those are different things that we have to look at. But now we're actually seeing real inflation, as reported by the government and reported in the numbers. So we are going to dive into that today. So let's get into it. Now, here we are. We are on the Bureau of Labor Statistics. This is the government agency or entity that releases the CPI data, the Consumer Price Index. As you can see, new releases, CPI for all items rise 1.3% in June. That's gasoline, shelter, food, and other things. Obviously, shelter came with a lag. We didn't see a lot of shelter inflation when we were living through the pandemic, and many people were not paying their rents and stuff like that. And there was a lot of laws preventing evictions and all those different things. And so, and even as the housing prices started to increase, the actual rents that people pay to rent out a place for where they live, those actually come with a lag. So now we're starting to see that even more, just FYI. So looking at it, it says it rose 1.3% seasonally adjusted and rose 9.1% over the last 12 months. So it's looking like it's just a lot of inflation out there. Let's look at energy. So go to energy commodities. It's like 60%. So fuel and oil, this is a big one. So I wonder what the inflation is going to look like, next month with the price of oil. It's down quite a bit. 10%, something like that. But, I think that the number could be a little bit lower next month if the price of oil stays down. But we know that there hasn't been much investment into the oil sector, and that we're still seeing supply shortages and supply constraints and all these things based off of policy and governments and policymakers preventing us from making new supply, from us, going out to be able to drill and all those different things. And so, Oil, I believe the price is going to go higher until we see a shift in policymaker and politicians' decisions. Right now, there's a lot of talk about Biden being, damned if you do, damned if you don't. He has to, he wants to fight inflation. He wants to reduce the cost of oil and gasoline for the citizens, but then he can't, increase supply, because then he's going to make the green energy folks like really pissed off at him and everything. And so, and he's trying to get, other countries and nations to, cut down or increase their production without paying them. And so he's doing a lot of things that just does not make sense. And like he can't be able to do all of them. He can't have his cake and eat it too. So something's going to have to give. And so until we see that, I believe the oil price is going higher. So we can see, all these different commodities going up. I mean, food is up. Food at home is up a lot. 12.2%. If you're looking at that, and then they break it down, cereal, dairy products and such, so yeah, they got quite a few things that are rising up. So yeah, so food and shelter and energy have been the most expensive. So let's go look at Shadow Stats and see what they have to say about inflation. And here we are on Shadow Stats. This is for June 2022. So they updated this today. And we see that the blue line is the 1990 based way of how they measured inflation then. And then you have the 1980 down here, the base alternate. So looking at this, you have the official CPI, which is the red line, experimental CPI. So you have it at, 9, over 9%, 9.1%. And then this is just way off the charts. Like you can't even see what this one's at, 12% or something like that. That's based off the 90s, I guess. Or maybe 15 or something like that. And then, looking at the 1980s method, we're close to, 18% inflation based off the 1980s way of measuring inflation. And this is the actual CPI at 9.1%. So we see that, if we measure it based off the old way that they measured inflation, we would be at, record highs. Right now we're seeing, it's the record high since 1981. Like we haven't broken those 70s highs for inflation. But if you really measure it based off the method that they use, like we would have broken those records. So, one thing that we have to look at is how is the Fed going to respond? The Fed has been hawkish. The Fed has been coming out saying that they are going to fight inflation. They have to tame inflation. That is their main priority, all those different things. And they have been raising interest rates. And we know that raising interest rates is sucking liquidity out of the economy, out of the system, and it is causing a lot of pain. We're seeing a lot of layoffs. We're seeing recession fears just become even more evident with the Fed's policy and how they're responding. And I think that personally, they are going to rate hike even more. The more inflation goes up, the more they are going to have to get it under control or attempt to get it under control. And I don't think they're giving up the fight just yet. And I think that it's possible that they are going to, do a 1% rate hike. And so many different articles are starting to talk about this. It says hot inflation fuels bets on supersized Fed rate hike. This is from Reuters. The U.S. Federal Reserve is seen ramping up its battle with 40-year high inflation with a supersized 100 basis points rate hike this month after a grim inflation report showed price pressures accelerating. Everything is in play, Atlanta Fed President Raphael told whoever, while he said he still needed to study the nuts and bolts of the report. Today's numbers suggest the trajectory is not moving in a positive way. So think about it. They've been raising rates and all those things. And hey, man, you making too much noise, man. So think about it. They've been raising rates and all those things, and it's not helping. Inflation keeps going up month by month. So it's not moving in a positive way. How much I need to adapt is really the next question. So Bostic has been among the bevy of central bankers in recent weeks, signaling support for a second straight 75 basis point rate hike at their upcoming policy meeting on July 26 and 27. So now people are saying like, okay, well, they're going to have to go 100 basis points because the rate that the basis points that they're raising the rates by right now, it's not working. It's not bringing inflation down. It's not up to the level of inflation. I mean, if you really wanted to let interest rates rise and take interest rates above the inflation rate, you may be able to tame inflation. However, we have so much debt. The government needs taxes. They need that tax receipt income. And that is going to hurt the asset market so much. That's going to hurt the stock market, cryptos, all these different assets so much that the government is not going to receive a lot of income from those tax receipts. People are going to have a hard time paying their bills. People are going to have a hard time servicing their debts. The government is going to get less money, and they need more money because they are currently operating at a $3 trillion deficit for their budget. And we talked about that. So I think that coming up, July 26th, 27th, the Fed is going to raise rates again. It's either going to be 75 or 100. If they raise it by 75, it's going to cause a lot of panic in the market because they're going to be seen as not doing a whole lot to tame inflation. If they raise it by 100 points, I think it's going to cause a lot of panic in the market because that's a 1% rate hike. So either way, I think that the markets are going lower, and how I'm going to play it is I'm going to play some put options. I may play some put options on the SPY around the 26th to 27th, just knowing that this meeting is coming up and they are going to be hawkish. They have to fight inflation. At some point, they're going to pivot. Luke Gromen talked about them pivoting before quarter three because of the tax receipts. This may be this month, and next month may be the last rate hikes they're able to do before the government comes and says like, hey, we need you to chill out and we're just going to have to let inflation run hot. So we'll see how that plays out. However, I did make some money today. Yesterday, I texted my cousin, hey, CPI numbers are coming out. I'm expecting them to be higher, but they could be lower, because the price of oil dropped or whatnot. I told him, I was like, hey, I'm about to play some put options on the SPY. So I was able to make, $500, to $1,000 in between there. And it was pretty nice. It was pretty easy. Okay, CPI is going to come out. The market's going to sell off in the morning. And then, I can cash out. So that's exactly what I did. Now the next move is probably going to do that on July 26th and 27th. Just because the Fed's going to raise rates, the market's going to panic and sell, and I can make money in the bear market. So that's what I'm doing. Leave a comment down below if you have a different strategy of what you're doing. How are you handling this? How are you making money during this time? How are you preserving capital? What are you doing? So I want to know what your thoughts are, what your advice is. And I appreciate you all for joining me today. Hit the like button, hit the subscribe, and I want to thank you all. All right. Peace.